Our guests today, Hitesh Idnani, they're joining us to talk technicals, and Saurabh Jain to talk fundamentals. Thank you so much, gentlemen, for taking out the time to be with us and answering questions from investors. Let's start straight away with the questions that are coming in. The first question coming in from Samiksha in Mumbai, who joins us on the phone line. Samiksha, good afternoon. What's the stock you have? Samiksha, can you hear us? Okay, looks like we can't get across to Samiksha, but that's her question. Let's try and pull her out, the question out for her. 100 shares of Coal India at 300 rupees for Samiksha from Mumbai. What's it looking like for Coal India? With it does look like Saurabh, that the FSA, the fuel supply agreements issue may be resolved. They might just be able to get some better prices with the pressure from the Children's Investment Fund. What is the outlook for the stock? It's been inching up slowly.
Fuel supply arrangement, I think some more time would be there would be some more time would be spent on this issue, and I expect that penalty of close to 4 or 5% may be imposed on the company in case the company does not supply the fuels, the quantity of approximately 80%, which is in the news, to all the power producers. As regard to operational front, I expect the company is expected to post good set of numbers, because in the first quarter itself, company has achieved 100% target of close to 102 million target, and there is also a sense that full year target may be revised again on the upside of 464 million ton. All in all, the stock is looking good, and the company is doing well on the mining side. Besides that, since the investment in the stock has been done close to 300 level, and today 20% of gains are in the pocket now. So my advice would be it is better to book partial profits at this point in time.
Okay, partial profit. It always looks good when you have money, when money comes into your pocket with an investment. Hitesh, what story is the chart telling you?
Well, if you look at Coal India, it's been range bound between 300 and 400. The shorter time frame has got 360 as a resistance, but this is overall a great script to hold on to. So I've got a hold on this one. We can keep holding with 300 as a stop loss, and let's see if the trend materializes from here.
Okay, that's for Hindalco there. That's for Coal India, excuse me. But we have the next caller joining us on the phone line, Chaitanya from Mumbai. Let's go across and let's speak to him. Chaitanya, good afternoon. What's the stock you have?
Hi, good afternoon, everyone.
Good afternoon.
I have 50 shares of Hindalco at 124.40. So I am looking at a timeline of say 3 to 6 months. So what should I do?
Okay, let's get the technicals for this one. It's been pretty narrow and been in a narrow range bound fashion. That's how it's been trading. Hitesh, Hindalco, is it going to be seeing some kind of move up on the charts?
If you look at Hindalco, it's below the 200-day moving average. It's in a downtrend, making a pattern of lower tops and bottoms. So if it goes below 105 to 108 and remains close on a closing level below that, there is further downside. Above 152, it would get bullish, and so my suggestion is to exit from this counter, wait for a close above 152, and then that's when we could look at initiating longs in this.
Okay, that's the technical picture. Fundamentals, Hindalco, does this inspire confidence? Has been during the last bull run, it was among the worst performing Sensex stocks, Saurabh, but does this look like picking up steam at all?
I don't think so. I think because of the challenges in the macro environment, both domestic and on the global front, I think all the metal companies would face challenging times. Besides that, the last quarter performance would not be repeated again because of the slide in the domestic currency. Though commodity prices have fallen, I think there would be quite a bit pressure on the cost side, which would eat away the margins also. I'm a bit skeptical about this space, and there is a about 80% of the revenue comes from the aluminum segment, and that are very much linked to the LME prices. And since we are witnessing softening in the aluminum prices, I think that would again put pressure on the company profitability. So it's better to take money from the table. I think it is better to sell your position. My advice would be to sell.
Okay, Hindalco not inspiring enough confidence on the basis of fundamentals for Saurabh Jain. Let's move on, take the next question. On the phone line from Ahmedabad with us is Dhaval Bhai. Dhaval Bhai, how are you and what's the stock you have, sir?
Yeah, good afternoon, everyone. Yeah, thus I want to invest this money in banking sector and health sector. From the banking sector, I have chosen the CS Bank, as well as the health sector, Fortis Healthcare. Since my horizon is 2 years, so then my basic question is, at what level should I enter in these two stocks?
Okay. The Yes Bank at about 360, Fortis should be a little over 100 rupees right now. First, let's check the technicals there. Hitesh, Yes Bank seems to have slowed down after the pace that we saw, after the strong gains that we saw for that in the last few months or so. Fortis has been a non-performer in the last few months as well. Any particular levels you'd suggest that anyone look to enter in these stocks?
Well, let's take Yes Bank first. I would advise the investor to wait for a closing above 375 before initiating any longs in Yes Bank, because the closing above 375 would confirm an uptrend. If you look at Fortis, currently around 105 odd, trend, wait for a break above 120 before thinking of buying this. But currently Fortis definitely is not on anybody's wish list the way the charts are looking right now. Yes Bank, wait for 375 and you could look at going long.
Okay, that's the take on the two stocks there. The technicals part of it was just one part of the story. The fundamentals, is Fortis a better bet than Yes Bank right now as we ride through a difficult time? Sort of fundamentals, healthcare would be an area where a better return, it's more recession proof in that sense.
Yeah, I mean it is a recession-proof industry, but in case of Fortis, there are a lot of nervousness is there on the company's on the company's balance sheet and operation front, because of the simple reason that because a lot of acquisition were made in the last few months, which has piled up the balance sheet with huge debt. The debt which was less than even 1,000 crore has now gone beyond to 6,500 crore. The interest expense was not there, was not visible in the last fiscal because major part of the debt was taken during the end of the year. But I think in going this year in the current fiscal, there would be a huge impact because of the debt servicing, and which would erode the profitability. So my sense is better to look for other company. As regard to Yes Bank, I think some concerns rose over in the last few months as regard to the company's business, the bank's business. The deposits merely grew by approximately 7% in the last fiscal, and credit growth was close to 11%. The kind of valuation at which Yes Bank is trading, it is trading at close to 2.5 times to its book value, and that does not gel with the kind of business growth the bank has witnessed. The bank's management has set a target of close to 35% in the business growth in an otherwise depressed economic environment. My sense is better to look in the banking space in the PSU category, in which valuations are giving a lot of comfort. Maybe one can look at the Dena Bank, Allahabad Bank, Andhra Bank. The banks are trading even below to their book value, even after the adjustment to giving an adjustment with the NPAs. So my sense is better to look at these banks and avoid investing in Yes Bank as of now.
Take the next question. Kishan Kumar from Nagpur has written to us. He wants to invest 5 to 10 lakh rupees right now, and he wants our experts to suggest some stocks for the short term. Short term in this market, I'm not sure how smart an idea that is, but he's not given us more details. So let's ask Hitesh, 5 to 10 lakhs in the short term, is this a good time to invest in the markets, and maybe a few stocks that you can suggest, Hitesh?
Well, first of all, this is not the best time to get into the market because we've been very, very sideways, if you've noticed, for the last 10 to 15 days, and any moves that we are getting are very, very short term. So if at all you are really interested in entering the market, you have to have very short term profit targets, get into counters which are in a well established bull market, and grab any profits that you get. So three counters that come to mind are ITC, Hindustan Lever, and Jubilant Food Works. Both of them are in well established bull markets. You can enter at current levels and look for profits of anywhere between 5 to 8%. I don't want to give any more ambitious targets for these counters because the overall market has been very range bound, and it's quite possible that we get back into that range which we are at the top part of. Nifty is currently at the top end of the range. So I would advise you to get into these counters with a very short term target, if at all you are really interested in getting in at this point.
Okay, those are some stocks to keep an eye out for. Saurabh, would you suggest people to get into the market with a short-term view right now? And second, any specific names you'd suggest as well?
I don't think so it is advisable to enter market with a short-term perspective because of the huge volatility for the reasons we all know from the domestic and from the international perspective. But if anyone wants to get into the market with a long horizon, I think PSU banks, which I just mentioned a few minutes back, like Dena Bank, Andhra Bank, Allahabad Bank, and mid-size IT companies like Hexaware, KPIT Convenience, Persistent Systems. These are some of the stocks at which one can bet upon.
Okay, that's the advice for Kishan Kumar from Nagpur. Let's see if we can now speak to Brajesh, joining us on the phone line from Delhi. Brajesh, good evening. What's the stock you have? If you can hear us, what's the question? What's the stock? Looks like we've lost connection with him. I'm sure we need better telecom companies, but his question, he holds 600 shares of HPCL at 277. What are the future prospects? Fundamentals first. Falling crude oil prices, Brent below $100. Saurabh, that's one factor. That's positive for the oil companies, for the oil marketing companies. He's making some money. Should he take that profit home?
I think because of this primary reason, we have seen a huge gains in the oil marketing companies since April. I think the under recoveries on the diesel, kerosene, LPG have came down significantly since April, even after adjusting the depreciation, the deceleration in the domestic currency rupee. If you see in the April, all the three oil marketing companies were losing more than 500 crores on these subsidized oil products, and now they are losing close to 350 crores. In case of diesel, which accounts for nearly 60% of the under recoveries, the under recovery has significantly came down from around 14 levels to close to 9 rupees now. I think because of this very fact, we have seen a good amount of rally in all the oil marketing companies from the 277 price. Now the investor is making around 25% money, and I would advise him to book partial profits at this point in time, because all these downstream oil marketing companies, fortunes still lie on the government policies, and which are not seen in very much in shape. On the diesel front, I don't expect any big announcement from the government side. So we may see continue to see huge volatility in these oil marketing company share prices. So it is advisable to book partial profit, at least at this point in time.
Okay, that's the fundamentals part of the picture. HPCL, what are the technicals telling? And I would imagine that this would also mirror the charts of the other two companies, probably slightly bigger than what HPCL is. Hitesh?
Yes, Ashu, I mean, there's nothing much exciting about the charts of HPCL. It is range bound. It's not doing anything much. We could hold with 300 as a stop loss. Currently, it's around 350 odd levels. The investor got in at around 277, I believe. So 300 would be a logical stop loss. That's the bottom end of the range. And if we see a range breakout, he would profit from that. But if we start coming towards the bottom end of the range and there's a breakdown, he always has a stop loss at 300. So that's the prudent thing to do with HPCL.
Okay, that's the technicals for HPCL. Gentlemen, we've completely run out of time on the show. Thank you so much for joining. It's time for disclosures and picks. Saurabh, if I can request you first.
I personally do not any of the stock that we have talked about, but my company and clients may have question. As regard to stocks, I think PSU bank space is looking good to me.